Hey, good afternoon, traders. This is Trader Tim from eManyMind.com. Today's Monday, October 19th, and we're doing a market analysis to get things started for the week. Now, if we take a look beginning with the S&P, we can see taking out this little swing low from last week, Thursday. Market's not quite closed yet, got about 45 minutes left. And when we get these kind of one-day bounces and then roll over, it's very likely that we'll be able to make it to the next halfway back. It's sometimes called like a two-leg pullback, or you could kind of think of this as a little bit of a fake out as we move above the high of this low bar. And in last week's video, I mentioned that when you have a fake out like that, or a move that starts in one direction, but then we roll over and break in the other direction, that can be a pretty strong move. So while we have a strong chance of making it to this 50% at 33.80, we also have a pretty high chance of retesting this 32.76, this the larger halfway back. And as we talk about, leave that big retracement up until we either complete the negative 23 or break the 61.8. You don't want to get too caught up in the smaller time frames here and start drawing things up on the, in this case, the daily chart, but then forget about the bigger time frame, because when we do come down, there will be opportunities for support. I had this little one drawn up on last week on Friday after we kind of came down to the 34.36. If we take from lows to this little high up here, we didn't make a full retracement, and so I just grabbed from the low just to kind of project out, okay, if we were to run in a week's time, where would that target likely be? And it was right above highs. So we'll get rid of that just for now. A couple things I want to touch on. Gaps. Watch what happens when I put the unfilled gaps on from the last couple of days. We gapped down last week here on the 15th, right to the unfilled gap, filled that one. We closed at the unfilled gap from the 14th, filled that one. We opened today and sold off, and we almost tagged up on the 34.19 unfilled gap. And so that's why these gaps are really important that are unfilled, because they become targets when the market gets moving, in the next couple of weeks. Now, sometimes they hang around for months, but usually they're filled fairly quickly, especially when you have a move that goes up really fast with gap, 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 gap. You're going to typically fill that fairly quickly in the next, the time that it took to make the move up. So if we just want to say from here, 1, 2, 3, 4, 5, 6 days, we should be able to fill, these gaps in the next 6 or so days. You'll notice that the breadth and the advanced decline line are not incredibly bearish. I mean, Dow's down 400. That's a decent sized move for the volatility that we're seeing. Relative to VIX, what is the market range is something that I compare a lot. Like if we're in a VIX 15, extremely low volatility, well, the Dow making a 200-point move is going to be really big. But if you think back to March of this year, when the VIX was up in the 50s, Dow making a 500-point move was pretty typical, and that was even on the smaller side. So if we look at the VIX, we don't really see a big spike, certainly not taking out these swing highs. So if we come back to the SPX, we can see not really getting a major pullback here as we look at the bigger picture. But we didn't really tag up on to make kind of a true double top as well. So we're kind of in this awkward limbo area where, yes, we could come back down and just trade at the next 50%. But we could also just come down and make a double bottom and retest the larger 50% and then make our way higher. With the U.S. election in 3 weeks' time, we've got a lot of potential for this type of volatility to stick around, or at least some of these gaps, and one day moving one direction, the next day taking it all back. We also have a lot of earnings coming out in these next 2 weeks, so pay attention to that. I wanted to highlight a couple of swings that I have on. The BLFS went on above the high of the hammer here, and it's given back a lot of what it pretty much what it has made thus far, but just stop below the swing low. I didn't really go super aggressive with longs, and I really haven't had many swing trades in the last couple of months, but the last week or so has yielded a few opportunities. TAP on the 12th sold off below the low of the high bar, and that's getting a move lower today with the broader market. Keep in mind we've got earnings at the end of the month, so if I still have, you know, 2/3 or so of the position on, I'll try to cut that down. If we can get down here towards lows, I'll definitely be taking some off as we approach that earnings. And then NTES was another on the short side. This one was on the 13th, sold off below the low of that high bar that happened to be right around the 50%, and today also getting a move lower. Took some off when we broke above the high of the hammer here, cut the position down, but then just going to keep my stop. If we can close and then move lower below the hammer, then I would just keep my stop above the swing high there, and we should be able to maybe get down to the mid to low 80s on this guy. Whoops. So those are really the only two swing shorts I have on. I chose not to put on a SPY short yet. I was waiting for us to get a little bit higher, up closer to this 358. But if we do, then I'll consider putting on a hedge. But have those two swings, and the individual stocks tend to move more than the broader market will. So it's nice to have a couple of shorts on when the market's been so strong. Not a lot happening on Friday and today as far as intraday trades go, at least for me. We did have a couple nice pullbacks to the halfway back on the 5-minute chart, but didn't really get a short setup off of that. And sometimes on these days where we gap and then slide like this, there's actually not a lot of opportunities intraday, and so by having the swing trades on, you kind of capitalize on this move without having to get extra risky intraday and just trying to force something. Now I do have a couple of traders who have an interesting concept. They're looking at the 5-minute chart, and when a 5-minute bar closes near or at the 50%, they are, in this case, like shorting below the low of that bar. So using the 5-minute chart in conjunction with the halfway back, I personally don't trade that way, so I don't have long-term stats on that. But I have had questions in the past about what if I trade the 5-minute bars and then use the break of the 5-minute bar to enter when that is at or near a 50%. And as long as you're targeting the negative 23 and keeping your stop loose enough to make it there, either keeping your stop above the 61.8 and then trying to get the trade down to the negative 23, you can keep that reward to risk in your favor. But I thought that was an interesting approach, and if you want to dive into that a little more, be my guest. Tomorrow we'll be doing a live trading session, as we always do on Tuesdays. You can check that out, eminimind.com/VIP, and throw your questions below in the comments. Thanks, and have a great week.